So today, when I was on the elliptical at the gym, this exchange on CNBC, I feel every single person should listen to this exchange. Let's take a listen to Gary Cohen and Jay Clayton on CNBC.
And I don't think it's really a Trump trade. I think it's a realization of where the real economy
is. Is it a good thing, a bad thing, or is it a reimposition of some sort of forced fiscal austerity when it comes to what's expected from government?
I don't know.
That's something we've been discussing. Look, the balance sheet's different, right? I mean, our balance sheet is not in as good a shape. You've had super smart people on here, Tudor Jones, Stan, tell you that this refinancing wall that we have coming up and what we've got to do in terms of refinancing our debt is vastly different than things we've faced in the past. 60% of
Vastly different. Okay, I want you to listen.
the debt comes due within 5 years.
Would you put more stake?
I'm going to rewind that just a little bit, and we're going to keep listening.
Comes due within 5 years.
Would you put more stake in a?
Tell you that this refinancing wall that we have coming up and what we've got to do in terms of refinancing our debt is vastly different than things we've faced in the past. 60% of the debt comes due within 5 years.
Would you put more stake in the betting markets or in the polls? And here's what I was saying.
So here's the thing. So even if the Fed funds rate goes down, what they're really saying is if someone is going to make money over and above the Fed funds rate, the margin of their profit to buy those treasuries, those 5, 7, 10, and 30-year treasuries, they're going to have to be at a higher yield for them to be incentivized to actually make the purchase. Therefore, interest rates may be a little bit more sticky over the next 5 years. I thought this was a key point that everyone should listen to. Let's continue to listen.
If it's 58%, someone's going to win the election. Would you get on a plane if it was a 58% chance that it wouldn't crash?
No.
Neither would I.
No.
Betting markets. So they used to underestimate Trump because people wouldn't admit that they were voting for Trump. So that's been the way it was in 2020, 2016. Now they could have overcorrected for that because they put in different models. Do you think either polls or betting?
22 is overcorrected, right?
Overcorrected. Are either one of them any? Do you have any idea what's going to happen tomorrow? Either one of you.
Let's recognize what I think a couple of your guests have already said, which is the Trump voter is a different voter today than the Republican voter of 20 years ago. In fact, the Trump voter of today was a Democratic voter of 20 years ago.
Many of them.
And going back to Pennsylvania, if you get those people in the middle of the state, blue-collar jobs, middle-class people to turn out, right, then Trump wins. And it's very hard for pollsters to do that because it's new.
So what I really just want to say is, day before the election tomorrow, regardless of party, get out and vote. But I really want you to think about the deficit. And whichever candidate actually comes into office, I feel it's the single most biggest issue that we have that needs to be considered when you go to the polls. My name's Kevin Retcher, owner of First Meridian Mortgage. To all the Marines out there, I say Semper Fi. I'll talk to you soon. I look forward to serving you. Have a great day.